After our recent downgrade earlier this week to AA minus, we have now put the rating outlook on stable. It was previously negative. So actually, the immediate answer to your question is not too vulnerable at the moment.
Okay, so what would you say about the fact that now we are equal that of Britain, under that of Macau? Macau is an economy that is very much dependent on gaming, which has gone to practically zero because we've got no visitors going into Macau. How is it that you can make that kind of comparison? Can you talk us through that?
Yeah, well, there are probably a couple points that are worth mentioning. As it pertains to Macau, it is true that Hong Kong is now one notch lower than that of Macau, but the way we think about it from a ratings perspective is the balance sheet. Now, Macau has something like 130% of GDP in fiscal reserves. It could probably have zero fiscal revenue for 7 or more years and continue to spend down that fiscal reserve. That's compared with, in our baseline, Hong Kong having fiscal reserves about 30% of GDP. But just to kind of step back for a second, the Hong Kong rating story and the downgrade was really, it's important to remember that the COVID-19 pandemic is inflicting economic shocks and reverberations across all of the world. However, Hong Kong is a bit of a different starting point because of the social unrest that experienced last year. And so this is the second major economic shock that Hong Kong is experiencing just in the matter of the last 12 months. Now, that social unrest led us at Fitch to downgrade the rating last year and put it on a negative outlook. But we've now downgraded again and stabilized the outlook.
Financial ties with China are expected to continue to deepen as we, of course, are now 22 years in since the handover. But this is going to be credit negative for Hong Kong. Why is that? And, of course, it's only going to get closer with China as the years go by.
Yeah, I think this is a very relevant point worth making, and it's one that we made in September of last year during the first downgrade that we made on Hong Kong's rating. And so the broader point is that we rate mainland China at A+ with a stable outlook. And we continue to have a higher rating on Hong Kong, but the linkages, both economically, financially, and from a socio-political perspective, have continued to gradually rise over time. And so as a rating agency, in thinking about where Hong Kong should sit, the rating relative to mainland China, we thought that that gradual integration means the ratings should be closer together. Now the ratings are just one notch apart, and I think that makes sense from the perspective of a sovereign rating because Hong Kong still does have some institutional differences with that of mainland China, and in particular, what we think is relevant is that it continues to maintain an open capital account. It has its own currency, and it independently manages its fiscal and external accounts.